G'day there. Welcome to Lunch Money. My name is Nick Samios. I am the fund manager and director here at Hermes Capital, and I am your Lunch Money host. Lunch Money is, of course, the home of workout, capital raising professionals. What are we? Workouts and capital raising and special situations professionals. There you go. That's our tagline. And we love small business here at Lunch Money. That's what I do for a day job is help out small business with working capital needs and what have you. And we have a very special guest today to talk to us about the current challenges facing small business. And without further ado, I'm going to introduce that guest, and it is none other than David Gandolfo. How are you going, David?
Very well, Nick. How you going, mate?
I am very well indeed. Now, David is a number of things. He is the chair of Advocacy at CAFBA. He is a board member for now for COSBOA. I think you've got some tenure left.
I'm actually I'll be finishing during June, but I've been on the board for 9 years.
And you are, of course, partner at Quantum Business Finance, and you are not just David Gandolfo. You are David Gandolfo OAM. And I'm not entirely sure why you've got the OAM, but let me tell you why you should have the OAM. If you don't have the OAM for saving small business finance in Australia, that you should get another one. I know that there's been some times when well-meaning, shall we say, government ministers at a federal level have wanted to tinker with the way small businesses borrow money. And I remember there was a time when David had stepped down from being president of CAFBA, the Commercial Asset Finance Brokers Association, and I sent David a message saying it's time for Batman to put his cape back on. And Batman did put his cape back on and fought those good fights. So whilst I know that all your peers in commercial finance know what you've done, it's impossible for small business to realise what you've spared them from, and you and your colleagues, obviously.
Well, that's very kind of you to say, Nick. And it was about all of it. The actual when you get an honour like that, the Order of Australia, it's you get a citation of the things that were taken into account, and it was all of that stuff, all the advocacy that was done, or that has been done and is still being done over many, many years, and it lists specific things like the Productivity Commission and the Royal Commission into finance, and as you say, changing the rules that or dealing with politicians and just shaping policy and perhaps making them aware of unintended consequences of things that may or may not happen. But the big, one of the first big ones that we had was in 2013 when we were successful in stopping consumer regulations coming into the commercial finance space. And what's good in theory is not always good in practice. It would have been, it's okay to have protections for small business and remediation and fair contract terms, and of course that's as it should be. But if you started to impose the credit process for small business on a commercial, it just wouldn't have worked.
That was the specific time where I think you had. I guess you're a little bit like Muhammad Ali. You've had a few comebacks, but that was, I think, your first comeback was to come back to fight that good fight, and it was just as well that you did, because there were other small business advocacy groups that thought that at a high level this sort of consumer style protection of small business was a great idea, but they had to listen to CAFBA to understand that it basically would mean that small business lending would dry up. I mean, and with disastrous consequences.
Well, so you obviously know the story. That's a good segue to COSBOA. So COSBOA was, for those who are not aware, COSBOA is the Council of Small Business Organisations Australia, and basically its members are industry bodies like the Pharmacy Guild and the Master Grocers, the hairdressers and the newsagents and so forth. So we went to COSBOA some years ago when they were proposing that consumer regulation and protections should apply to small business, because small businesses are people. And we explained what the difference would be if that happened. And yes, remediation, debt remediation, contract terms, all those sorts of things, absolutely, couldn't agree more. But credit process was never going to work. And we convinced them of that. They changed their policy and invited us to actually join COSBOA. And very soon after that, I became a board member.
Yeah, I can only imagine that COSBOA would be that much better off with CAFBA. There's just I couldn't imagine it without it, to be honest with you. So you've been on the board of COSBOA for a number of years now. Now COSBOA has released this perspectives report. So tell us what the COSBOA perspective report is, just to sort of by way of introducing that.
Okay, well, it's basically a deep. I don't want to use. Paraphrase the CEO who said this yesterday, but it's a deep dive into what's happening in small business at the moment. It's a report that was commissioned by COSBOA, sponsored by the Commonwealth Bank, and COSBOA's got about 40 members, organisations who are members, who in turn have hundreds of thousands of small businesses who employ literally millions of people. So there was a lot of insight. There's a huge pool of information, and this is like the human data that comes out of small business. The banks have got their metadata and they know what's happening, through their transactional terminals and through their PDAs and things. But this was about the human data, and so the things that were found is that there's, and I think you've got a slide.
Sorry, just before you go to that, just so people understand, it's the Council of Small Business Organisations. So COSBOA is getting input. Obviously from commercial finance brokers. I think the last time I looked, like there's the News Agents Association, and I mean, just give us a bit of a spattering of the sorts of small business associations that are in there.
Okay, so the Pharmacy Guild is obviously a very large and prominent one. The Australian Hairdressing Council, the association which represents, or the Master Grocers Association, the association which represents news agents. In fact, there's two that represent news agents. There's those who the national retailers and booksellers. There's all sorts of organisations which form part of COSBOA.
So the various industry representations.
Virtually every industry that makes up small business is represented at COSBOA or through COSBOA. And so you've got the Business Council, the BCA, which represents Telstra, Qantas, the major companies. COSBOA is the small business equivalent.
Yeah. Okay. So based on the report, what are the most pressing challenges that are currently facing small business in the country, and what are the potential impacts on the overall economy?
Well, perhaps just go back to where we drew the data from, and what we found initially is there's thank you. There's a slide there. Small business in Australia employs about 6.8 million Australians. It's the largest employer of people in Australia. It generates about $68 billion in net income tax, $856 billion in revenue, and $19 billion in net GST to the state. So it is an extraordinarily significant part of and an important part of the economy, but also of community. I mean, you look around your football, Saturday morning, your kids are playing football. The sponsors and basketball and things like that, the sponsors are local small businesses. They are not, the government.
Look, I know one of Forrest Sins, our general manager, has become the a senior person on the P&C at school, and if it wasn't for the support of local businesses, that they'd be nowhere. So there's certainly that. I mean, 6.8 million Australians are employed by small business. Now you think, well, the population of Australia is 25 million, but no, not every one of those 25 million is working. I don't know the size of the workforce, but I think that's nearly half of people that are gainfully employed.
It's near enough to half. Yeah.
Yeah, I remember once I very cheekily asked at a I was attending, I can't remember what it was now, but there was a whole bunch of super funds, and I made the comment that half of the people in the Australian workforce are employed by small business, and yet 99.999% of superannuation fund investments are in big business.
Yes.
Now, obviously, there's some interesting reasons behind that, but it is interesting that it is a little bit lopsided. And look, I mean, you've got there $68.6 billion worth of income tax, but of course that doesn't include all of the pay-as-you-go tax that those employees. So the contribution is absolutely huge.
At every level of the economy and of the social strata, small business is it's omnipresent.
Well, I mean, I think the essence of and it's important that there's a strong small business community, because it's very important that people can form enterprises, obviously, because that's where innovation and future employment and all those good things come from. So getting back to the
go on.
So getting back to the report, then, I mean, what are the most pressing challenges that small businesses are currently facing? And
okay, so this is probably what we already knew, but at the moment, you've come through COVID. Small business has shown how incredibly resilient it can be and how it can pivot to new situations. And a lot of small businesses were able to do that. A lot were not able to do that. But right at the moment, we've got this perfect storm of rising costs, declining revenues, workforce shortages, particularly in skilled labour and skilled migration, and cyber security. And so, and to sort of break that up a little bit, there's supply chain issues are still affecting everybody. And I know that in our business, in this business, which is in commercial finance, we've got tons of clients who have ordered equipment and don't have it yet. And of course, the tax incentive for that is going to run out on the 30th of June and got to go down to $20,000 of instant asset write-off. That's a whole other issue.
Yeah, we'll come back to that. I've got that as one of my questions for later on.
Yeah, okay, all right, thank you. You've got the rising cost of money, of interest. And then, of course, within the last week, you had a wage case where you had 5.75% increase to the minimum wage. That's on top of the 7.1% last year. So, and in fact, the wage case in itself was one of the reasons that the Reserve Bank just put up rates by another 25 basis points. So, that to say that we're not in a spiral is wrong, and to say that any of these things are not inflationary.
Well, the other thing though is we'll come to that as well, because I want to talk a little bit about that later on.
Right, we might need a bit more time.
I reckon it's pretty simple actually, but it's not only, so you've just rattled off a bunch of things there, and of course the poor old small business. I mean, they've got a whole bunch of compliance and red tape they've got to adhere to. We won't go down that rabbit hole, but I'm sure that's one of the things that COSBOA is concerned about. I mean, to actually start a business and to run a business, I mean, you're full time making sure you're dotting your I's and crossing your T's so that you're not in trouble with the regulators. So yeah.
You're in a business that's small. You don't have a compliance department.
No.
The compliance officer is the shopkeeper. That's it. I mean, their job is head of accounts, head of marketing, head of PR.
Yeah. And so getting back to sort of those key findings. Yeah. Okay. So there's interest rates. You talk about supply chains. Now, I know that I speak to commercial finance brokers, particularly out of WA, but all around the country. They can't. There's two things they can't get. They can't get gear, and to this moment, the second-hand equipment prices are still really high. I mean, I know they're eased back a little bit, but I keep an eye on used vehicles, and they're still relatively high. And that obviously speaks to the scarcity of just capital goods, and that's without going to timber and all those other inputs. And then of course nobody can get staff either.
No, that's right. So, I mean, through COVID, you had a net loss of skilled migration. They all left, and it's taken some time for that to be resolved. And that still is not resolved, particularly in areas like catering and restaurants and just delivery. So, delivery of services. So you've got that. You've got it's costing more to employ people, and that's not just the wage case. That's also payroll tax. It's the superannuation guarantee, which is again just about to go up. Work cover premiums. All of these things happen in concert at the same time. So,
another interesting. I saw an article today, and I meant to clip it. But I don't think I did. It was saying that one of the problems, because everybody, I don't know if you've done it, but people say, where is everybody? Like, how come the cafe can't get anyone? No one can get, where are these people? And I saw an article today suggesting that larger companies are hoarding people. So they've got more people on their payrolls than what they necessarily need. I don't know.
Well, that's quite possible. It is quite possible, because there are people here, but there are certainly, if you look at the students who actually fill a lot of those lower end jobs and part-time jobs, they left. They literally left, and they didn't have resident visas, they had to go home. So, and it's taken a hell of a long time to get them back. And because other markets opened up before we did, some of perhaps the ones from the subcontinent who would normally have come back here have gone to Europe or to the US. So,
but it's not just that. The suggestion is that the large banks and the large accounting firms, etc., large professional services or services across the board, have actually I've got more staff on their books than what they need.
And this is where, we have virtually full employment. Yeah, mind you, there's a shortage of. That's because of the shortage of people. But I wouldn't disagree.
Yeah, interesting. And so, tell me, the report emphasises the importance of government support for small business. So, there's some specific measures or policies that COSBOA recommends. Obviously, the government was in boots and all during COVID with all sorts of different support mechanisms. All from guaranteeing loans through to through to JobKeeper and all that sort of stuff. So what does COSBOA want the government to be doing to help support small business?
Well, specifically in a broad sense, they just really want government to get out of the way and not to have over-regulation. It's your earlier point. Every small business has to comply with as many things as a much larger business needs to comply with, and so deregulation would be good. So that energy relief. We all know that energy costs are going up and that they're going to continue to do that, and that gets passed on to everybody. So there are mechanisms that perhaps the government could put in place to assist with that. Assistance with cyber security, and there actually is a program. I can talk about the Cyber Wardens program with COSBOA, but really we just want from government policy that's fit for purpose, that doesn't have unintended consequences or that doesn't have overreach.
Well, the unintended consequences, I mean, you see policies come out and you think that is not going to work, because we know exactly for every reaction, the market reacts, things change. If you throw a left jab at me, I'm not just going to stand there. Like the market is constantly bouncing back and all the rest of it. I mean, there's just a couple of things that you touched off. When you say cybersecurity, I'm always a little bit wary of talking about that because I know nothing about it, but we'll come back to that second. The first thing that you mentioned was you talked about energy, and I know that COSBOA has looked a little bit about this. So what are the concerns there?
I'll just simply, the cost of energy and the input cost that into your business and the ways in which you have to pass that cost on. You can't absorb it. You certainly can't cop a 20% increase in the cost of electricity or gas or energy overall, and just absorb it. So, and the thing is that it's been going up and up and up. Now, there's an argument about whether or not sustainability is going perhaps too fast, or going down the path of green energy is going too fast before we can replace the coal energy and the coal-fired power stations that we've got. So there's that sort of argument. We don't get into that, but certainly you've got to wonder how the government thinks in the long term these costs are going to come down.
Well, I wonder how coal prices are going down and gas prices are going down, but energy prices are going up. But let's not go down that rabbit, Warren. So experiences of energy hardship vary from business size and business sector. So so not surprisingly, I guess it's some of the larger ones that are suffering from the energy costs more. By sector, hair and beauty. Okay, that's interesting. Childcare, engineering. I mean, there's still, as you get into the heavier stuff, as I say, engineering and manufacturing and transport and logistics. They're all suffering. Now, I notice here, just across the bottom there, we've got some of the things that the desired solutions, what SMEs would like to see is payment flexibility, better communications, direct contact and independent advice, and removing the stigma. So any comments on any of those?
They're reasonably self-evident, but before you get to those, really what we're asking for or suggesting with government with energy is just some sort of clarity in terms of the way that the wholesale prices are set and are passed on. So, payment terms, reductions, subsidies, things like that. It is actually possible for the government, notwithstanding the cost of energy, to actually subsidise it. And of course, bear in mind, I mean, you look around your own office, a lot more things are automated than used to be. And you've got more screens, you actually use more energy in the course of your business and in your home than you ever used to. So, years in the 50s and 60s, I know it's a long time ago, but you had your TV and your kettle and your light switches, and that was pretty much it. Now, literally everything, your curtains, everything. I mean, it's all automated. So, depending on the way your house is set up, but we all use tons of energy.
And when I was a kid, there was one socket in my bedroom, and that was it. And I stayed in a motel. I stayed in a cheap motel up in Queensland. A long story, but it was an older building, and there was I think there was 2 PowerPoint sockets. It's not like the modern hotels. There's USB sockets and USB-C, and you're right. I mean, we're all using a lot more energy. Was there anything firstly? Yeah, I mean, when you're talking to your manufacturing, you're in Melbourne, so I guess you've got clients in manufacturing, and it's not all manufacturing. You've got transport, and but I mean, are any of those clients specifically complaining to you, in your business?
Absolutely, and they're saying that their energy costs are up, 30, 40, 50%, and they're not small bills. I mean, they could be $8,000 a week if you're in a large manufacturing plant, and then the cost of putting solar panels on the roof is hundreds of thousands of dollars. It may or may not solve the problem or offset the cost of your production capacity, but certainly it's a massive cost, and it's behind rent, wages, energy is one of your biggest costs, and if that's continually going up, then that affects your gross profit. It certainly affects your net profit. Somewhere that cost has got to be recovered.
Now, was there anything that surprised you in these findings? Well, you said that some of the stuff you kind of expected, but what sort of?
Well, some you expect. I mean, there was a little more information coming about technology and its impact, or the impact of changing technologies. People are worried about AI and worried about new technologies, but they're also seeing there was an opportunity. It's either for any business, and take AI as an example, your business or mine, it's either going to be an opportunity to do more processes more efficiently, or it's going to make you redundant. So people are concerned about staying ahead of the curve or ahead of technology, so at least they know they can understand how to utilise technology in their businesses. So it's about opportunities and risks, navigating that digital transformation and not just being left behind by it, because it's very, very easy to sort of, not keep up with it. And then to recover or to catch up is very, very difficult, particularly with operating systems and CRMs and software systems that you use in your business. And then, of course, security. I mean, everyone's petrified of security, and I don't.
Just tell me. Yeah, I mean, again, this. We obviously have all. Being what we are, we've got all different levels of security at the local level, at the server level, and offsite, and all that sort of stuff. I mean, what did you find in terms of cybersecurity? Are people generally aware of it? Are they doing enough? Presumably not. What?
Well, no, they're not aware. That's just the thing. They don't quite know what to do. So, and that there just aren't as many security points in the process as there should be. So, and I'm not saying this to sort of promote it, but the Cyber Wardens program was one that the government was promoting or has set up. So, but they need a delivery partner.
What is that? Sorry, what is that?
The Cyber Wardens program is, and please don't ask me to get into the the detail of how that works, but and this is I'm not on the part of the board that or the part of COSBOA that will be in the delivery part of it, but the Cyber Wardens program is a government program, and the implementation of it has been, or the oversight of the implementation of it has been awarded to COSBOA on a 3-year contract. It's $23 million, but that's the cost of putting it in place. And the Cyber Wardens program is about qualifying or educating more people about cyber and having more people in not just the supply chain, but the technology chain of the people with whom you do business. So there are more and more security points in the business, in the technology part of the business that you're dealing with. So, and the people that you just mentioned, your IT providers, people here in the office, or people in your business or in your operating part of your business, more and more people being more educated about what to do, what not to do. And of course, there's other programs that go along with that in terms of hardware and facilities.
Okay, but I guess for now, if you just Google Cyber Warden COSBOA, I suppose there'll be some information there.
Just go straight to the homepage of COSBOA and it'll be on there.
Right. Okay. All right. Now, finally, on the subject of COSBOA, before we sort of move off that, I understand that there's a new CEO. I mean, how will that influence policy? Who is the new CEO, and what sort of new perspectives are you expecting?
So he's Luke Acterstraat, and I hope I'm pronouncing that correctly. It's a Dutch name. I know that I am. Luke is formerly from the Property Council. He was, I think he's on about day 8 of being the CEO of COSBOA. Of course, you'd know that for many, many years, Peter Strong was the CEO and had a very, very high profile. Alexi Boyd was in that role for a bit over 12 months and moved on from that role, and we were and policy was being run by the chair. But Luke's background is from the Property Council and from being within government and from being within a minister's office. So he understands the full process within Canberra, and he certainly can navigate all of that. He's very, very good on policy, and not just at articulating policy, but developing policy. And a lot of what we do with government is actually giving our insight from the ground level, from our membership, of what members want and what policies will work and won't work, and what proposed policies will or may not do, or how possible or impractical they may be. So, and it's not just being reactionary, but it's having foresight around policy as well. So I think Luke will be excellent in that. He's had a piece in the Telegraph yesterday, which you may or may not have seen. So he'll be very good at articulating COSBOA's ideas and points of view in the media as well as in Canberra.
Okay. All right. Well, that's I guess that's good to know. That's very that's comforting, I suppose, for those that are closely watching COSBOA. Look, let's get onto a couple of other areas. The big news. Oh, by the way, I've just put a little ticker along the bottom of the screen there, which is anyone watching live. Please feel free to shoot us a question. Ask us tough questions. David loves tough questions. And anyone who asks a question, we will send you a lunch money mug, which I don't have one right here, but it's a beautiful ceramic mug with lunch money. They're quite
highly prized.
They're highly prized and very collectible. So yeah, just if you're watching on LinkedIn or Facebook, as long as you're live, obviously. No good sending it the questions in when you're watching the replay. All right, now look, David, as I said, interest rates are the big deal this week. Now I've got my own little insights into interest rates that I'd like to share with you, if you don't mind. Now this will take you back to Economics 101 when you were at school, but nobody's talking about this. Now, what I've got here is a lovely chart that I created using Reserve Bank data. Now, the red line is the target cash rate. So this red line here is the cash target rate, the RBA's cash target rate. And as you can see, obviously it's spiked up, from nearly 0 to 4.1 where it is now. Now, this blue line is CPI. And you'll see that traditionally, the cash target rate exceeds CPI. There's all you would normally expect that CPI is a couple of percent above. That the interest rates are a couple of percent above CPI, because if I lend you $100 today, in 12 months' time, it's if inflation's 7%, in 12 months' time, I need at least $107 so that the money I lent you hasn't lost any spending power. Or at the moment, on those rates, money is losing spending power. Now, economists talk about real interest, and real interest is the interest rate adjusted for CPI, which just means taking the nominal interest rate, that cash headline rate, 4.1% at the moment that you hear about, and deducting CPI. And you can see at the moment, and for some time now, interest rates have been negative. So you can talk about why interest rates are going up and, wage claims and all that sort of stuff. I look at this graph, and to me, there's one, that red line has to get back above the blue line, or the blue line has to come under the red line. Now, I guess you might argue that the wage cases and what have you, and all those other pressures, energy costs, are forcing the blue line up, but the red, somehow that needs to invert. Have you got sort of any? That's a question without notice, but any thoughts on that?
Well, you just explained, the importance of net zero inflation, haven't you? And this is what the Reserve Bank's always trying to do. They're looking at the CPI. Well, they're looking at a proposed or a forecast CPI rate and trying to set interest rates according to that, so that your cost of money actually is net zero. So, but you've got to your point about $107 from 12 months from now, you've got to have a margin over that, and so interest would normally be higher than CPI. So
most of our working life in finance, I mean, the interest rates that you've been dealing with for most of our working life, it's been CPI plus a couple of percent. And it's upside down, which means that even your home loan. What's the home loan rate at the moment? 5% thereabouts. And this is not financial advice, but you're better off drawing down on your home loan and buying stuff now, or invest. And the trouble is in investments. But look, I'm getting off topic. Now, you're dealing with interest rates every day, as I am. But I mean, you're in your role, as a partner at Quantum. So how is this affecting your day job?
Okay, so it's surprising that it's not really affecting it at all. In terms of the volume of business that we're writing, and we are ahead of where we were, significantly ahead of where we were last year, and obviously the year before. But if you go back to pre-COVID levels, back to 2019, 2018, we're significantly ahead of that as well. So now part of that is the cost of goods has gone up, and so we're funding. Each asset that we fund is more expensive than it was a few years ago, but we're certainly ahead of than that CPI increase. So it hasn't stopped people. Keep on hearing gloom and doom, and that the economy is going to slow down. What you're hearing in theory is not actually happening in practice, and I imagine your business is the same, Nick. So people are still spending money. Businesses are still investing in their business. And acquiring new assets and borrowing to do that, and the change in interest rates. Go back to when interest rates were at their absolute historic low, and no one expected them to stay there forever. But if you had anything outside of what the normal big four banks were doing, you weren't paying those record low interest rates anyway, because it was really only the major banks who were offering money at the absolute prices.
Yeah, but like a lease on a car, for example, was down to what, 2.9% or something. And
there were some deals that were down there, and that sort of equivalent pricing now is probably in the sixes. Well, it is in the sixes.
Yeah. But the thing is though, interest rates. I think that last rise, that's really going to hurt. And they are certainly well. Apparently 25% of home buyers in New South Wales last year bought for cash. So it's not going to hurt those people. But this green line I've got here, interest rates are negative, and negative interest rates stimulate purchase and investment, because like we said, if you hold your money, there's no point saving the money because you're losing value. And so it is stimulatory, as counterintuitive as that is, given the level of interest rates. So, but that's interesting. So you've mentioned a couple of things. We talked about supply chain. So it may well be that the fact that people just can't get gear, they need the gear, and if it's a couple of extra points, it is what it is.
Well, I mean, you look at the cost of interest. You've got to be more interested in what the exchange rate is. I mean, if you're in a capital intensive business, you've got a lot more to fear from a change in the exchange rate than you do from a change in interest rates. So it's and the wage increase that's just been handed down, that's going to impact your business far more than a slight or than a 25 basis point and even the collective, 400 odd basis points that have been factored in. But I go back
there's
to
other stuff going on too, the labour hire thing as well. But sorry, going back to.
But in a business sense, if you're, and we only do commercial lending, and this is, as you say, this is not financial advice. But if the cost of money goes up, what's the cost of not doing whatever it is that you are going to do? If you need to invest in your business, if you win a contract and you need to acquire new equipment to fulfil that contract, then, well, if the interest is slightly higher, then that's just part of your margin. And I mean, not being flippant about it, but if you look at what the benefit is in what it is that you're about to invest in, it's not about the cost of acquiring it; it's about what it'll actually do for you. And if you think about things in those terms, then you will factor in the cost of interest as you do any other input.
Oh, look, I mean, it's the sales pitch for our business. If invoice finance is going to take 2% off your, off your top line because it's a discount on your invoice value, but you're going to double your sales and you've got a gross profit margin of 40%. What 2% is nothing. And I guess you're saying the same thing. I guess when you're doing equipment finance, it's always about if you're replacing a new machine or if you're adding, if the machine's going to add capacity, then it's all the economics on that added capacity. And I guess generally an extra couple of points. I mean, it's always fascinated me that I remember when I was in leasing, I'm not now. But yeah, I mean, people would nickel and dime you, like for $2,000 payment for $10. And I had a great mentor that once, used to say, well, for the extra $30 you get me, and it's not about, it used to work, But
those prices are a lot more aligned now. There are so many more offerings out there in the market. So the other thing that's helped the broker profession is that there are so many offerings that people wouldn't otherwise be aware of if they didn't go to their broker, and the broker is going to have a holistic view of their debt requirement over the next, say, 12, 18 months. And they're going to have a strategy behind how they actually put that forward. So the actual cost, they're still going to get the best available funds for which they qualify. But they're also going to have a holistic
the subtext is here, you got to talk to a broker, right?
Oh, I totally agree, whether it's me or somebody else, but you can certainly talk to that.
Well, I use a broker for everything because, and I'm in the finance game, and trying to navigate the banks is nigh on impossible. I mean, I don't have the time or patience for it. So that's what you guys do. Look, we just the final thing on interest rates. So you're not a home loan person, obviously, but you do have. I think you do have someone working that desk in your, under your roof. The cliff, is it real? Is it not real? I mean, what's the view? What's the view at your place?
Well, it would only be a cliff if everybody fixed their home loan rate on the same day. Now that period of the super low rates and the subsidy from the government ran over several months. I think probably 6 months, and so that adjustment period will be over a period of time. But certainly it's going to hurt a lot of people. And if you're on a fixed rate in the 2s, and then you're going to go to an interest rate in the 6s, I think a lot of people may not in fact know what their repayment's going to go up to until they get the letter from the bank, and then they're going to realise just how impacted they're going to be by it. But it's not a cliff.
No. I think that's fantasy. It's like how people in my game talk about the ATO. There's no wall of insolvencies. That's not the way the world works.
There are always going to be people who are less able to accommodate or absorb an interest rate increase than others. But a lot of people have been using those super low rates to actually bank money and to fill their offset account or prepay their mortgage, so to actually absorb or to help them get through a rate.
Yeah, I don't have that stat, but I have used it before. Yeah, there was. I don't know what it's like now, but there was an enormous amount of savings both at the business and the personal level. Listen, we're just going to wrap up. I've got a couple more questions. If anybody's thinking about asking a question, this is your last chance. So a couple of things. Firstly, end of financial year. There's the end of temporary full expensing, reintroduction of instant asset write-off. You had a couple of comments on that?
Very disappointed that the instant asset write-off actually ended in June of last year. I think there's a perception out there that instant asset write-off and temporary full expensing are the same thing. They're actually not. Temporary full expensing was a stimulus measure to encourage people to invest in new equipment, and it virtually applied to everybody. And it didn't matter the value of the asset. So there's very few. There's a lot more people who qualify than who don't. But the problem is that you might have gone and ordered 3 or 4 Kenworth trucks or under that tax regime, and you're going to get delivery in a different tax regime, thinking that you're going to get, for every $1 million that you invest in your business, there's $300,000 in tax that you didn't think you were going to have to pay. And by virtue of something arriving in July instead of June, that's what the financial difference is going to be. So that's very disappointing. We had at CAFBA, through CAFBA, my industry body, we had suggested to Treasury in our budget submission that at least you could extend that deductibility for people who could demonstrate they had an order as at budget night. They didn't take that one. But we did ask for the reintroduction of instant asset write-off, but we suggested $100,000, not $20,000, and COSBOA's position was the same. In a small business, an average small business, there's about 3 hours of accounting in preparing a depreciation schedule. It's probably $300 an hour. There's $1,000 just to account for assets that could otherwise simply be written off. And at the other end of it, there's the tax office going through that as well. There's the amount of admin that's required is kind of crazy, and there's no incentive to go and invest in your business if the maximum deduction for a single asset is $20,000.
Well, the thing is, though, David, it's not just investment in the equipment, because that $100,000, if you did get the $100,000 instant write-off, that's $100,000 you can go and hire an extra couple of people. It immediately creates employment.
Yeah, that's right.
So it's instead of making those choices. All right. Well, just finally, what's Quantum's business outlook?
Well, we've got a lot of our forward orders. We know what people are buying, and we keep stats, and we've got figures on the approvals that we've got in place and the ones that we need to have in place between now and this time next year. And forward orders are actually very, very strong. But it's mostly, certainly mining. We've got a WA office which is powering along. But transport, logistics, materials handling, supply, manufacturing, all of those market segments are still going ahead and strongly. And we are not really exposed to the catering and or the restaurant and catering sort of segment of the market. We're more in the heavy equipment. But certainly our outlook is fairly strong. But none of us can quite work out how long this is going to last. So there's still going to be a fair bit of legacy from supply chain and things still arriving over the next year or two, and that will keep things going. If there's any talk of recession, you're really only going to get through the next 12 months, and certainly I think we're quite comfortable that we can all do that.
So you're not. Okay. Look, just as we wrap up, the best way for people to get in touch with you, I guess, is if you're watching this,
give me a call.
Be a link. We'll give David a call, but there'll be a link. If it's LinkedIn, you just click on where it says David Gandolfo OAM, and you'll get through to him. And if you're if you're watching this on Facebook or anywhere else,
the Quantum Business Finance website, or I'm very easy to find online.
Yeah. Okay. All right. Very good. What's the Quantum website?
Quantumbusiness.com.au.
Okay, quantumbusiness.com.au. I'm not quick enough to type that as a banner, so you'll have to forgive me. Quantumbusiness.com.au, or just click on the link wherever you're watching this. All right. Well, that's very good, David. I'm really thank you so much for coming along. You may be wondering where our other guest was today, Louisa. Unfortunately, she wasn't. She had a last minute thing that came up, so. It was just the two of us, but I guess we would have gone for an hour and a half instead of 45 minutes if that was the case. Thank you very much for this, David. It's been fantastic. Thank you to COSBOA, and pleasure, thank you to everybody watching.
Always great to catch up. Thank you very much.
Take it easy. Cheers. Thanks. Bye-bye. Bye.
Thank you.